All right, we're live, and today we have a special guest.
Oh my gosh, John
Tiffany
Banks.
joined
This is
us
stupid.
today. So it's not just me, you get a bonus, 2 for 1, Frank and Tiffany on our first live on the channel. So I'm really excited. So welcome, Tiffany, to the live. And let's talk a little bit about what we're going to get into today. So we pulled some data from NAR, which is the National Association of Realtors. Tiffany wanted to make sure that I spelled that out for everybody. The National Association of Realtors always puts out reports. And this report is basically just talking about buyer and seller profiles. Who's buying? And this is really from a national standpoint. So buyers, sellers, investors, who's buying? And then what we want to talk about is we're going to talk a little bit about what the NAR is saying. And then we're going to talk about, does that distill down into Myrtle Beach? How does it distill down? What does it mean for Myrtle Beach?
Down.
What's wrong with distill?
I don't know.
So,
is that a word?
I don't know. It sounds good.
Okay.
But what does it mean for Myrtle Beach? So if it says that XYZ is going on as a nation, what does it mean for Myrtle Beach? And that's really what's important to us. So we're going to get right into it. But I wanted to remind everybody, hey, Ed's here. Ed Brown. Happy New Year, buddy.
Ed. Happy New Year.
Let's put up it. Happy New Year, Ed. Good to see you. Or well, not really see you, but good to hear from you.
Car icon. That's cool.
It is a cool icon. So we're going to talk about the report a little bit, but if you have questions or comments, put them in the chat and we'll talk about them and we'll try and answer them as we go. And I'm excited to have this conversation. So I pulled some notes and some report from the NAR, but we're really just trying to figure out what are they saying is going on in the country right now. I think 2025 was really interesting. You'll see a video come out from Tiffany and I on kind of like a recap. Would you say it's a recap on Myrtle Beach for 2025? And we'll talk a little bit about those stats here today. The video will be very in depth. Today we'll go over some of those statistics, but then I also want to talk about the NAR. Do you have anything to add before I kind of dive into the report though?
It just sounds boring talking about statistics. You have me on the boring channel video.
Tiffany thinks the report that I put together and the notes are boring, but I think
it's important information.
It's important information.
Yeah, but let's break it down on a way that makes sense.
Let's do our typical routine where I put on my glasses for everybody, and because that's what I need to see. Okay, since I'm getting old. Basically, what we're going to talk about in the NAR report is they talk about existing home sales at historically low levels. I think that's interesting. Affordability remaining the dominant constraint, which I find is true. We'll talk about that. A record share of cash and repeat buyers. I think that's interesting. The gradual inventory normalization, and then a market that rewards preparation, pricing discipline, and negotiation, which is where we come in. Right? Wouldn't you say? Okay. Sure. Okay. So it says basically let's talk about the first topic. So existing home sales, 2024, 2025 ranked among the weakest years on record. And I think also that NAR, the other big point from this is that they're they're projecting a 10 to 15% growth in 2026. Do you have any thoughts on this? Or because I do. And I just think those are both interesting stats. I think the market was slower.
I think it was slower, but it wasn't slow. Like it's a balanced market for the most part. Some segments of our market is slow, the oceanfront and condos in general, but housing, like single family detached homes, I feel like unless you're the 800 and up range, that was slower for sure. But the 300 to 600 seemed to be the sweet spot that they were still selling, like good days on market, still a lot of buyers. So I guess that does touch on the affordability aspect of it, because before that we were having, 800 and up, like you couldn't even get a house. There was no inventory. So I think it just depends on the segment of the market here, specifically in the Grand Strand, whether that's true, what they say or not. I think that's like a whole summary of everything, but I don't know that it's specific to every segment that somebody might be thinking about buying or selling in.
No, I agree. I think it's not exact for every part of the country. I mean, so one of the benefits that we bring is, I coach probably 50 real estate agents all across the country. So not only do we have the NAR report, not only do we have what's going on here in Myrtle Beach in this area, but I talk to 50 real estate agents every single week, roughly. And I know what's going on in pocketed areas of the country. And so like, for example, Austin this year, they saw a huge decrease, but they're going to be a booming market again eventually because there's so many businesses moving there. So I think you got to take this and say, okay, again, they're saying 10 to 15% growth or sales were slower, but then you go up to like a place in the Northeast, like Connecticut is on fire. There's no inventory, right? And that was the case almost all year. Now it's a little slower right now, but for the most part, some places in the Northeast are on fire and it just was no inventory, where you come here where we don't have a ton, but we have way more. And so I think that is kind of what you're saying, right? Yeah,
for sure. I mean, I feel like it's just really balanced, unless, like I said, the condo market is slow, for sure.
Yes. And we're going to talk about that when we get to that on the Myrtle Beach part. So aside from that, it says here, that median home price is a big, people get misunderstood with median home price. So cash buyers now represent, which I thought this was really interesting. Cash buyers now represent roughly 1/4 of all transactions. Repeat buyers dominate market activity, and first-time buyers fell to roughly 21%, which was a historic low. And I'll give you some other stats that I think I want to get your opinion on. Wealthier, older buyers are purchasing more expensive homes, and it skews the median price data upward. Price reductions increase, homes sit longer on the market, sellers negotiate more aggressively. So prices aren't rising because the market's strong. They're being influenced by who is buying. So, what they're saying essentially is that people who have the money are purchasing. And so even though stuff is slowing down, the people that are out there buying doesn't necessarily say that the market is great. They just have the means to do it.
I mean, I guess, but I think here we're not seeing those higher price properties selling. It's really that middle ground that's selling now.
Yes.
Whereas I think 2 years ago it was skewed to the higher end of the market because we had a ton of buyers like dumping money into the $1 million plus category. Whereas we're not seeing that the last 1 to 2 years here. So I don't know where that is. They have all these wealthy buyers. Bring them here.
Well, but how many people do we see that buy properties in cash here?
No, as far as the cash buyers, I would say ours is more than 1/4.
Yeah,
for sure.
We see a lot of people with cash buyers.
Yeah, because they're selling at more expensive markets and then taking that cash that they've made and buying something here because it's still more affordable than where a lot of our buyers come from, the Northeast mainly.
And it also, yeah, totally. It also talks about repeat buyers dominating, which makes sense because they already have a home. They can access equity. I think that's really the other piece of this is first-time home buyers are struggling. They can't get the money. And how many times do we see parents paying for the down payments of their kids, right? We saw that as well. So it was a little bit of both.
But that's interesting though, because a lot of the buyers or potential sellers that have the equity, they are staying put because they don't want to give up the price that they got it for and their interest rate. So that's kind of weird that it says that they make up the most of the market, because you would have thought it would be people that don't have a home and need it. You know what I'm saying? Because otherwise there's a lot of people that don't see it making sense for them to make a move and give up that interest rate and the price that they got their house for and all of that, unless they have to.
Like, yeah, you're saying you would expect it to be people who don't already have a home because they need to get into one, not people who have a home
that want to stay in their good situation.
Yeah.
So,
well,
I mean,
they're keeping them, I think, and then they're either buying a second property, right? A lot of them are accessing equity from a property they already have.
Yeah, but I think a lot of the second home buyers that I'm seeing are they need to pay cash, or they're kind of a little more timid to get that second home. Especially, I guess this is off the topic, but short-term rental rents have been down that I'm hearing. I mean, personally, ours was okay, but a lot of our clients and the message boards and everything are saying, I didn't get as much rental income in 2025 as I usually get. I'm really hurting. And then that's just not contributing. But a lot of those second home buyers and investors are looking at that and saying, should I invest my money? Can I make any money? Is this safe?
And on that topic, I think what's interesting is the Airbnb whole crisis situation. So I think this is worth clearing up because we have short-term rentals here in Myrtle Beach. None of the oceanfront properties are going to be anything but short-term rentals. I mean, that just doesn't even make sense. What I want to clear up is you see a lot of Airbnb is not great, or the Airbnb is basically the term for short-term rental. We're talking short-term rentals. Vacation rentals. They've been around forever, but what I think the people that are suffering or the ones that are having a tough time is those individuals who aren't committed to just doing short-term rentals. They're the ones that are like, hey, I'm going to get a home in a neighborhood. And then what happens is the neighborhood or the HOA or the city changes the rules, and then they can't do short-term rental anymore there. But the way we do it, we're doing it on the ocean. So there's the only real play is just short-term rentals. So I think that's a big piece of what that is hurting that industry.
Well, I think the main people hurting are the ones that bought a place like end of 2022 to beginning of 2024.
Yes.
The prices on the ocean front had gone up over, 30%, more than that. And interest rates, we had clients paying 9% on a loan. But then all of a sudden, out of nowhere, a couple years ago, the insurance rates like quadrupled overnight. And then buildings started to do assessments for construction repairs because of the collapse on the building in Florida. It was like a whole storm of stuff. So if you're going in and you have a mortgage, you only put 20% down, you're paying 9%, you have all the insurance, the assessments, and then rents are down across the board. And then you have management fees, like it's chipping away where people thought this was a great investment. And then they realized like, oh my gosh, look what I got into. And now they're trying to sell it and they can't because the market is oversaturated on the oceanfront, or short-term rental condos in general off the oceanfront. They are clearing.
Yes.
We did see that at the end of the year.
Yep.
And also I want to say that 2 and 3 bedroom short-term rental condos, we haven't seen the same issues as with efficiencies in 1 bedrooms, because those are like a dime a dozen. So there's so much competition for that. But if you have a 2 bedroom or larger, it seems to be less on the market. And those are still selling in a reasonable amount of time. So,
and cash flow, right? Cash flow, if you're financing an oceanfront property.
Yeah.
I mean,
but that's the thing. Everybody came in and they were like, I can afford it with the rates for HOA and insurance right now, but nobody expected them to go up so dramatically. And I would say that short-term rentals are very great properties to have.
Yeah.
But you have to know what you're getting into. And I think that is affecting our market here locally, because a lot of people didn't know what they were getting into. And then the market kind of changed on that segment. And that is why I think that is hurting so bad in our area versus single family homes with people in it, or they just have it as a second home. It's their family home. That really hasn't seen the same kind of effect as the market. It's really been balanced.
I agree. It's a good point.
Did I get us off track?
Yeah. No, you're good. No, you're good. I think it's good. I think I'm just using the notes because I want to make sure we don't miss any topics, because I thought there's a lot of interesting points that I want to relate back to Myrtle Beach. And we'll be back on this topic. I think it's interesting though. Let's, price reductions and first-time home buyers. I think this is interesting. So historically, first-time home buyers represented 40% of the market prior to the 90s. 33% were probably closer to the more normal cycles recently, like in the last 15, 20 years. But NAR data now shows first-time home buyers are at roughly 21%, with the median age at 40. I mean, that is just really interesting. And I think what I'm seeing is a lot of people are hesitant right now. When I coach all the real estate agents that I coach, and in our business, I don't know what you see, but I feel like we see people that are just, they want to do something, they're not sure. And what I would say is it's because they think that prices are going to go back. I mean, we think this too. I mean, we want to buy lots and land, and we were like, oh, things are going to go back to 2019. They're just not going to do that, guys. prices aren't going backward.
Yeah.
They're not going to 2019. That's not happening. And for anyone who knows about when prices and products change in the economy, there's a big jump, and then they might stay this way, and then they jump again in the future. It might be 5 years, 10 years, whatever, but they never go back. And so what are your thoughts on that? I mean, because right now we have average first-time home buyer at 40. So if you're 20s and 30s, it's very difficult for you to buy. And they're also making up a very small portion. So that goes back to what we talked about earlier, where parents are gifting kids the money so that they can buy a property. I mean, what do you think about that?
Yeah, I think that a few things. I think people don't have the savings because the economy costs more. Rents cost more, so they can't save up for a down payment for a house.
Yeah.
I think, I don't know. Do you think it's because like 40s lived through the Great Recession and they kind of were scarred from that? And they think like, because, the early 2000s here, let's just take a condo, for example, 1-bedroom oceanfront condo, early 2000s, 275. Next thing you fast forward to 2010, that same condo was 75. And so that generation saw that happen. And now we're back, and we're like back to where that was. But it took over a decade to get back to what it was like early 2000s. So do you think that I'm not saying there's data on this, but I'm just bringing up a conversation. Like, do you think it's because we're scarred from seeing that type of dramatic market, and everybody that's 40 is thinking, oh my gosh, that could happen again, and I could invest at these high prices today, and then it drops, and then they're waiting to see if it has that drop and they can get in at the bottom?
I think it's a good question. I think it's very difficult to answer, only because I'm pushing 50. So I just turned 49.
Don't share.
Don't tell anybody. Yeah. Don't tell anybody, everybody. So, but you think about it. Yes. I think, when someone says, oh, the market's tough or slow, obviously a lot of people want to go straight back to what we lived through and worked through.
Yeah.
2007, 8, 9, 10, 11, right? We've been in the business a long time. So, but this is nothing like that. And
no,
that,
not at all.
No, but that also, that market was caused by housing. So yes, my logical brain, my brain says, okay, yeah, wow, that could happen. But then I go, but that was a totally different scenario, right? But
the normal, like, we're in the real estate industry and we are educated on that. But I think if I was looking from the outside and I didn't know market trends and what caused the Great Recession and everything leading up and what's happening in the market right now, like, I try to educate people. We are not in the same situation when the market kind of took that hard stop a couple years ago. We're not in the same situation at all that we were in 2007. No. Like, all the factors leading up to it are not the same. So I don't see that. But I mean, I tell people also, I wish I had a crystal ball, because I'd be rich right now in real estate if I had only known or could predict the future. But
I think that's important though. So if someone's watching right now and they're like, look, okay, you guys have been in the real estate business 25 years, 26 years, whatever, combined 40, right? Like a long time, whatever it is, 40, whatever it is. So they want to know, like, well, what should I do? And I would tell anybody, like, right now, this year, we're going to get into rates. But if it were me, long term, I would buy all day, long term. Now, if there's a saying in real estate, and it's not timing the market. It's time in the market. So it's not, hey, let me buy now and try and sell in 3 years. I think there's a lot of people that got burned in the last 5 thinking that, because things change drastically, right? Maybe some with flips, some investment property, and some with just like buying their property because they thought they were going to sell. And now they're like, I'm not selling because my rate's low and rates are high now. It might not be a price thing. It might be a rate thing. So if you're looking long-term for your family and you need a home, if you're 3 kids and they all have, there's a 2-bedroom home and you need to get a 3 or 4-bedroom home and you're going to live there long-term, buy. Yeah. Rates aren't going to be that dramatically different this year. They will probably go down, and we'll talk about that. But I mean, buy. I wouldn't not buy. I mean, and I think real estate's great long-term.
We ended the year at the lowest interest rates that we've seen in over a year. So, I mean, things really are headed in a great direction. And we're seeing rates even on the ocean front at like 6.5 to 7. That's great. We haven't seen that in a long time. That's like worst case scenario, investor condotel. So, yeah, I mean, why wait now?
I agree. I think that's
not.
And I think that's what I hope that helps anybody watching this now. If you're watching this later, I hope this helps you, because really real estate is a great vehicle for many reasons.
Yeah.
And we can future lives and future videos we'll do. And we've done plenty on our channel already that talk about the benefits, but yes, I would say buy if it's a long-term situation. Okay. So I think we kind of beat that one to death. So
what do you think about talk about first-time home buyers before we leave that, the whole Trump thing about no corporations buying up all these houses? Because that's really kind of the type of house that a first-time home buyer would purchase. You know what I mean? They're not going out and buying $1 million houses. They're buying.
Why you got to bring up stuff that happened in the news today? I don't have any notes on that.
You have to have notes. I'm just talking off the cuff.
I think it's a good question. I actually agree with it. I think something needs to be done.
I'm putting him on the spot.
Yeah, I don't think it's fair.
You don't think it's fair that
look, I'm a capitalist. I believe I'm all about it, but you can't have corporations gobbling up thousands of homes, and then that hurts the average American from getting into the home buying, the home market. So I just think it's not right. It also what they're doing, why there's a reason why they're doing it. So I think there's more to just that they're buying them, but I don't think it's right. I think it's smart.
Do you think if that happens, we will see a different number at the end of 2026 from NAR coming out saying, hey, first-time home buyers now are back in the market? Or what are your thoughts?
I think that's a great question. And I think, well, you could ask that question, but then where my mind goes is, well, what about all the FHA homes that there could be some foreclosures coming? Because there's a lot of modifications on homes that were being pushed back, and a lot of people who could have foreclosed, and what they were doing was just like adding it to the back. And they were like, okay, we'll just, redo it, and they'll add all the money to the back. And now there's a lot of different things going out there in the real estate market. I don't want to get too technical today, but that's another thing. So yeah, it could make a big difference, I think. And so you take stopping corporations from buying, but let's talk about this. Corporations, he's stopping corporations from buying. What about the homes they already bought? What if they said you can't own those homes? Or
I mean, I doubt that.
Well, but corporations also own them. What if they decided to dump them? Because that could change the numbers in the market too. So you could go a lot of different ways, because that's thousands of homes that could instantly hit the market if corporations were like, I don't want these homes.
Well, they're also saying if interest rates do drop, like let's just say 5%, that there's going to be a flood of buyers on the market in general. So don't you think those investors would hold on to the property for the appreciation that they can potentially get during another boom?
There's two pieces. One, the appreciation, yes. Then at some point, homes start to have maintenance. We know that from having a home. Yeah. So the corporations don't want to have to deal with the maintenance of owning a home. So there's going to be a sweet spot where they're like, okay, we've gained appreciation. When do we get rid of these homes and start unloading so we don't have to deal with all the maintenance issues on the homes? I don't know how that's going to work, but those are great questions and great things to think about.
And we actually saw this here in Myrtle Beach, because literally I've had clients that were outbid many times from cash buyers that were companies coming in to new home communities and just buying them all up.
Yes, 100%.
And really my buyers in real life, like this is real life, weren't able to get a house.
Yeah.
Because they kept saying like cash, and the builders were taking it. And then the buyers, they actually wanted to have their family in the home, weren't able to get the house.
100%.
So, I mean,
it's definitely a problem. It's definitely a problem. Well, you take that, then you compound it with the affordability issue, and it's a totally different housing market. And we've never had this situation, and it really doesn't help anything. So,
but I think it's gotten better. I can feel it loosening up the last 6 months. I really feel people's opinions about the housing market, and kind of a relief from people like, okay, I think, I can get back into the market now.
Yeah.
And they have started to buy up our listings, and I think inventory is moving a little better, wouldn't you say, than this time last year?
No, 100%. It's definitely opening up a little bit. And I think what's coming this year is probably going to help even more. It's going to be interesting to see if it's new people, or if it's people that we had people that had their homes listed and they took them off because they were priced too high. And note, if you're a seller, price your home correctly from the start. Don't not listen to your agent and put it higher than what they recommend. It's got to be priced correctly from the start. And if you do that, then it will sell. But what's happened is a lot of people took their homes off the market because they were overpriced, and now they're sitting waiting. They'll probably come back on the market. And so it's going to be interesting.
Well, I think the hard thing, and again, this was back in the recession. Remember when people in their mind were like, but my home was worth this.
I know.
But it was really just on paper because they didn't actually sell it. But it's like, I could have gotten this. And then it's so easy, even for us, and we're in the business, to like put that in your mind and be like, well, it's worth this. Why am I not getting this much? And it's like, well, the market's 50,000 lower now. And so I think separating what you put in your mind is like, this is what my home's value is, and then the reality of the market is hard, especially when it took such a quick stop, hard stop in the market, and kind of went down just a little bit. We're still well above 5 years ago prices. I mean, really every segment of our market, if you look over the last 5-year span, even the condo market, which has been hurt the most, still on average, we're over 30% to even 38% higher in a 5-year period.
Yeah, you're saying values.
Yeah.
Values are 38% higher than they were even 5 years ago.
Yeah.
So that's 2020, 2019.
Yeah. And that's even with the oceanfront condos, the off the oceanfront condos, like the worst hit segments, still have seen such appreciation over the last 5 years. So that really set a new standard for prices.
Yeah. And that's because of Myrtle Beach's location. People are moving here. We're always in the top places to move to. And
that Caribbean water.
Yes. To all my TikTok haters. Yes. The Caribbean water. Oh my gosh. You guys kill me. Maybe I'll talk about that later. I'll tell you what. I did one comment on the live video a couple weeks ago, and I talked about how the water in Myrtle Beach looks like the Caribbean many days of the year. And man, everybody's like, no, it doesn't. It's dirty. It doesn't look like the Caribbean. You're crazy. I mean, oh my goodness. So in response, I just posted today, you may not know this, on TikTok, our short from our video that we talked about
actually shows
the water looking like the Caribbean, so that everybody can just like calm down and like take a breath.
Yeah.
All right.
That's hilarious.
You guys kill me, but I love you. I love you just the same. Okay. So this is good. So who's actually buying homes in this market? Meaning what NAR says is married couples, it's funny, single female buyers significantly outnumber single male buyers. It wasn't huge. I think it was double though. Like 21 versus 9 or something.
I feel like that's pretty big.
So it sounds like you guys have your stuff together better than.
Obviously that's.
Yeah.
I mean, come on, ladies.
Multi-generational households are increasing.
Yeah.
That's for sure.
For sure.
That's definitely happening. So families are living together longer. Kids are living with parents longer. Grandparents are in. Yes.
Combining the resources.
Absolutely. Parents are contributing down payments. We talked about that. And, I think the question is, it kind of explains, the affordability issue is hitting everybody, but it affects everybody. So if we had if our son, who is not, he's 9, but if he was in the buying age right now and he couldn't do something, that affects us, because now we're going to help him. If we could, we want to help him get a home, and everybody, or he moves in with us, but it affects everybody. I think that's really interesting. I never really looked at it like that. I mean, I know it does, but I never thought about it.
Well,
everybody's affected.
Yeah. And I think parents do want to help their kids, because it's still like the American dream to have a home. So we're seeing in our market, builders doing specific like in-law suites with their own kitchen and everything attached to the main house floor plan.
Yeah.
Because I think people are seeing that, and that's a way that parents can help their children get into a house, but still have kind of their own space. But we're seeing that as something that's really happening here. So it makes sense. But people used to always combine resources as families, and then we kind of got all independent and moved away from each other. So do you think it's bringing families back together, Frank?
I actually think I think that we're actually going back to a good place in that regard. I would much rather, look, things are much different, but back in the day, I hate to say back in the day, but we're talking early 1900s, 1800s, the family did what the family did. So if you were a farmer, the kids grew up with the family, they farmed, they all stayed together, they lived close together. And I think that's great for families. So, that could be a silver lining out of all this. I mean, it could be. I would love it if Hudson hung around and we all worked together and stayed together, but
Yay, that'd be amazing.
We want him to be happy. But that could be one of the things that comes out of this.
But I think in our area, and I talk about it all the time, I was just talking about it today. One family member moves here and then another family, then another family member. And because they all want to be together. You know what I'm saying? So that's interesting that we see that happening all the time. They're coming as like brother, sister, mom, dad, aunt.
100%. Look, we don't want this to be the reason, but if this is what comes out of it and families are staying together longer, I don't think that's a bad thing.
Yeah.
So, oh boy, here we go. So before we transition to the Myrtle Beach market,
okay,
the big topic here now is mortgage rates and how that's affecting. So, housing is what they're saying is housing is a payment driven market, which we would agree with, I think. But even though today's mortgage rates aren't historically high now compared to where they were in 2020, 2021, 2019, right? Rates were really low. They were artificially low, but they were low. They're high relative to prices into the ultra low rate era that we're talking about. So many owners are locked into sub 4% mortgages, right? A move today often doubles their interest rate.
Yeah.
Sellers delay listing unless life forces a move. And that's always been the case. I've always said to my clients, like, people don't want to move. They move because they have to. And it might be for different reasons. Like, do I want a nice home, a nicer home? Yes. But I move because I need more space, or I want to be in this neighborhood, or, you're missing some features. But I got to be honest, like, going through the mortgage process, like, no thanks. It's not like a great experience.
But don't you see that affecting like a seller's motivation? Like if you go and they want to list high because they really don't care that much. They're like, well, if I sell at this price, fine.
Yes.
That'd be great.
100%.
But if not, I'm not really motivated. It's really the people that are pricing it right that really do have to move for a job, or they had a kid or whatever. It's forcing them to move, and then they get a little more realistic with what's going on in the market. That's what I've seen, at least. Don't you think? Yeah.
You're saying, so, our sellers saying like, hey, I'll just list it to be just for the heck of it because I really don't want to move. And then that screws up the market.
But they're like, if I get this price, then I guess I'll move, if I can get this price, but it's usually not a realistic, or if somebody makes an offer, they're like over $500. No, I'm not going to negotiate.
Yeah. But that's, I think, so that comes into part of the report that's actually not in our notes, where it talks about majority of people, and I forget the percentage, but it was very high. I think it was in the 90th percentile. Don't quote me on that. I think that's what it was. But it said most people are using an agent more than ever, which is very interesting because, there's a lot of options not to. But I think that's where a great agent comes in, because an agent should be sitting down with a buyer or a seller and being honest with them and saying, hey, look, this is not the price. This is where it's going to sell. A little bit high, okay. But when you go way off the reservation, most sellers don't realize that you're really, the majority of people are going to see your home in the beginning.
Yeah.
And if you miss that and you blow it, that really hurts your opportunity. How many times have we seen someone who, or they don't get in, they get an offer and it's at the price it should have been.
Yeah.
And they're like, no. And we're like, you might want to second guess that because it never is like that again. How many times has that happened?
For sure.
So, here's the question.
It goes down to their motivation, because
of course,
when they're in a good situation, they're not really motivated to move. So
then the question becomes, if rates right now are, anywhere from 5.9 to 6.25, on average, usually right now, depending on the program and how much you're putting down and so many other things, but that's the range. What's the rate that makes the market really open up? If I have a 4% mortgage or a 3.5 or I mean, heck, some people I think had 2s.
Yeah.
So if you're in the
2.25.
yeah, a majority is probably 3s and 4s.
Yeah.
But if you have a 3 and 4, what is the rate that makes you say, I don't care, I would move?
Well, I think even getting into the 5s is not hurting so bad. Like it hurts so bad to double your mortgage payment and get a smaller home because the prices are more expensive. And so, or even the same price home that you currently have, you move to the same price, but you're paying double because the interest rate.
Yeah.
That hurts.
Yes, it does hurt.
And that has,
No
I
one's
think,
going to move.
stopped a lot of people from making a move. Because I know a lot of people that are like, I would like to move, but it really doesn't make sense at the end of the day, which goes back to the motivation. Like, unless they have to, or something is really motivating them to do it, like they don't want to take that hit.
For sure.
So, but you know,
so you think in the 5s, just a 5 handle?
I think the 5s would make it more palatable to people to say, you know, it's not what I have, but it's maybe worth the upgrade.
Okay.
And right now, prices are still reasonable because it's a balanced market for residential homes here in the Grand Strand. So you can actually make an offer and you can negotiate repairs and all of those things that we couldn't do 3 years ago. So it's a good time to buy. But when the market, do you think the market, if it goes down, let's say to 5% and everybody starts moving, do you think that's going to change? And would it be more worth it to go ahead and buy something now and maybe refinance?
You could. But what your first part of your question, I wasn't picking up on. So what do you mean when you say, I think if rates get into the 5s, that will open things up. You're saying.
Yeah, but the problem is then affordability would go down.
Yeah.
As far as the prices
The prices
homes.
will go up because
there's more buyers in the
yes,
market.
yes.
There's more offers coming in. Sellers are going to be less negotiable.
I mean, that will happen.
Like right now, buyers are in a pretty great scenario because they can go in, they can make an offer. They're not stressed about like 50 offers coming in. They can actually do inspections, negotiate repairs, ask for closing costs, like all the things you couldn't do 3 years ago. But if the market goes crazy again, like 3 years ago, all of that is out.
I don't see that happening. I think there's too many people that have good rates. I don't think everybody's going to move. I think we're talking what gets some of the people to move. So if you're talking, I personally think I think 599 is great. You can get that in some loan programs right now. Builders can get lower, obviously, right? With incentives. I think 5.5. I think in the 5.5 to 5.75 range. That's what I would say right now. If they can get like the jumbo, like that, conventional stuff, if that gets into the 5.5, 5.75, I think that really helps things. I don't think it's going to solve the problem, but I think it does get a lot of people off the fence. There's still going to be plenty of people who are like, I've got 3, whatever. I don't want to increase at all. I'm good. But I think there are people who would move that bought 2020, 2021. They're unhappy. How many people made a decision too fast because they felt like they had to?
Yeah, of course, they had to.
Yeah, they had to.
Literally,
they were waiving all contingencies, and that happened so many places. And it was hard. And I think a lot of people are not happy, and that's why we started doing like renovations, because we felt like a lot of people would want that. So, besides, I think that'll help a lot of people. I think it'll open the market up. It won't solve the problem, but I think that's what it'll do.
Well, people can also tap into home equity lines that were 9-10% for a while there, getting 100%. A HELOC. So now if a home equity line is back into a reasonable 5 to 6 range, I think people might even invest in that part of the market and renovating their home to make it what they want, where they've been dealing with it, maybe not selling it, but maybe upgrading a little bit, taking advantage of the rates in that way.
Yeah. It's going to be interesting. There's a lot of things coming in 2026. Now, some of it is a guess. And I think everybody though thinks 6, from what I've read, is the number. I think if we get to
already there. No,
I know, but I mean, that's what they've said is like going to stay for 2026. Oh. And I think that I think there's a good chance it gets into the mid to 3/4, like 5.75, 5.5, maybe. But that's going to depend on, now let's be clear, Fed rate is different than interest rates. Okay. But if we are probably going to get, I say probably because I don't want to say for sure, but we're probably going to get a new Fed chair. And with the administration is probably going to really push a lot of incentives, whether it's for builders, whether it's for people that want to buy a home, whether it's for rates. I think they're really going to put their weight behind helping the affordability and just the home, the real estate market. I think they're going to really try and make an effort to change some things. So that could all change all this as well.
Well, how are we doing on time? Have we made it through?
We're good.
We're now into notes because
we're good. We're going on to Myrtle Beach. So let's talk about some things. So we talked about cash and relo buyers matter more here. Well, we touched on it. So would you agree, Myrtle Beach behaves differently than a lot of places in the country, mostly because we have multiple markets here. It's not just primary residences.
100%.
So we've got retirement buyers, we've got relocations, second homes, long-term and short-term investors. So that creates some resilience in our market. Would you agree with that?
Yes. But it can also be a detriment.
In what way?
If people aren't investing or buying second homes.
That's true. That's true. We don't have as many people that live here
than other places.
That's correct. That's true.
Although we are still seeing a lot of people moving here.
Absolutely.
But still,
due to climate, cost of living, taxes, there's a lot of reasons to be here.
Yeah.
I mean, so
we are here. We love it.
Absolutely. Yeah. Like if we did it, it's the right thing. All should do that. What are you talking? Let's go. What are you waiting for? Okay. So I'm just going over the points from NAR to talk about how they relate to Myrtle. So obviously here, we are more resilient, and I think that's fair because of the fact that we're a second home community.
And we have a lot of cash buyers here. I would say more than most markets, probably. We have a lot of cash.
Yes.
In our market.
Well, and what I was going to say was, and that was my next point, because we get a lot of people from up north where stuff is more expensive, they have a bunch of money because they sold their property there, and they're like, we can go here and live so much better. I should say, right? You can buy a home for half the price of what you could have had it up there and still have cash in your pocket. So we see a lot of people coming from places that are more expensive, and that also helps us.
A lot from the West Coast now, actually.
Yeah, we are getting a good chunk from the West Coast. Well, we talked about the condos and single family and new construction behave differently. Condos, we have a thing here with condos where we have HOA fees and insurance. We've talked about that a little bit. I talked about it on one of the lives with insurance, assessments.
We talk about that in videos too.
We have a lot of videos on our YouTube channel. If you've never been to our YouTube channel, I'm sure most of you have, but if you haven't, you should go there. But we talk about rental rules and assessments.
Questions to ask before buying something that you don't know what you're getting into.
Yep. Yeah. New construction, and understanding what segment you're in matters. And that's where a real estate agent comes in, because some agents just do oceanfront, some just do like single family. We do everything.
And we do
new construction, and we also are builders and renovators. And we also, invest in short-term rentals ourselves. We renovate short-term rentals. So we are very familiar with the whole aspect of real estate, but I think that's important to have that in an agent that you choose.
Yeah.
Especially in a market like this, because it doesn't all apply to everywhere. You have to know that segment.
Well, as far as a crystal ball, if you could say, Frank, is Myrtle Beach, the Grand Strand, a good place to invest right now with the prices and rates? And if so, is there a certain area or segment of the market that you would say would be the best investment going into 2026?
What is up with these questions that we were not planning to ask? What is the deal?
I like being,
spontaneous
on here, not in real life.
I mean, I think it depends on the person. So if you're looking for a strictly return, and how long, right? So if you're looking for like cash on cash, or you want to say like, okay, hey, I want cash flow, and you have cash to buy, then I might say an oceanfront property if you can stomach the costs.
Yeah, swings. But if you own the oceanfront outright, or put at least 50% down, let's say, even with the HOA fees and assessments and insurance cost, if you do the right things, it can be very lucrative.
Absolutely. Yeah. So that's what I was saying. Like if you want something that's lucrative from a cash on cash standpoint or a cash flow perspective, and you have the cash to buy or put a lot down, oceanfront makes a lot of sense. but you have to be able to handle the, hey, there's an assessment, 2 new elevators, there's $1 million and everybody splits it. Like that happens.
Yes.
To us, it happens all the time. So if you can handle that, yes, it's very lucrative. Or you could buy, I think this is a market that lends itself to investing for many reasons. We will continue to have growth here. We're planning for it. We know it's coming. It's happening now. People are going to keep moving here. So buying just a single family home, the returns aren't as sexy, but it will happen and you will see growth and appreciation. So is it an appreciation play or is it a cash flow play? Because you're going to get way more higher returns on cash flow on an oceanfront short-term rental than you will a long-term rental.
But it's also priced like so low right now on the oceanfront.
100%.
You can
for 1-bedrooms and efficiencies.
Yeah, and you can really go in and take somebody's struggle and like get a good deal.
Yeah.
We don't like to see people struggle, but getting it off their hands, is a good thing. So
lots of inventory.
But like people are scared right now because they're like, why is so much inventory out there? And so I think you have
That's the time to buy.
Yeah.
If it's the hot time, that's when you don't want to buy.
It's a little risky, right? You have to be willing to take risk. But what about land? I mean, we've seen land costs in Myrtle Beach, in our whole Horry, Georgetown County, Grand Strand area, just skyrocket. Like it's so hard to get land, and the land that's available is so expensive. So do you think like buying and holding on to land is a good play?
Well, I mean, if you buy into the long term that real estate will only get better and that we're not going back to 2019, the answer is yes, but it's still expensive. So yeah, I mean, I do. And there's a lot of growth happening. So I think it's just hard as humans. I think it's very interesting. I love like this process from a psychology standpoint of everybody just can't get out of when something jumps so much. They're like, oh my gosh, something's going to bring us way back. And I'm not saying that that's not going to happen, some anomaly that we can't see, but there's nothing that says there's a housing crash coming. So, I mean, yeah, my answer would be yes. Yeah. And if something does happen, then you just keep holding on to it. Now you have to be able to weather the storms, but if you can, then yeah, it's still a great investment. So, okay, we're getting close to the end. New construction. I wanted you to have a chance to go over that if you're cool with it. But first I want to talk about new construction in 2026, incentive over price cuts. So builders nationally and locally are using rate buy downs, right?
We've seen some even like 3.99 arms that they're offering. And you're like, oh my God, 3.99?
Yeah.
That's crazy.
And
but it's happening.
I also get a lot of comments about arms. Arms aren't bad.
Yeah.
Like if you use them the right way. So just make sure you understand what a 3-2-1 buy down is, understand what an arm is, so that you understand like, okay, would I use that in this scenario or not? Do you think rates are going to go down or not? They can be detrimental if you don't use it the right way and in the right period, but they can be a great way to help you get into a property.
Well, and if you bought, let's say when the rates skyrocketed and you have an arm, that's going to be good for you, don't you think? If rates stay at 5.
Yeah, absolutely.
Then you're going to see the benefit. But I have so many clients that are like, arm, I can afford this if I do an arm. No, I don't want to do it. I don't want to touch an arm. They have like such a bad taste. And I'm like, well, do you understand what it is and how it can work for you? And obviously we're not mortgage brokers, but it's part of our industry. And I think it can be a really effective tool for someone to get in the market and then potentially take advantage if the rates do go down.
Yeah. I mean, look, new construction builders, especially when they're in-house, some of the big builders, I mean, they're offering, they have the ability to give great rates.
Well, they buy in bulk.
Yeah.
They buy these interest rates in bulk and then they give them out as incentives on certain homes they want to get rid of. So
yeah, offering closing costs. So credits.
And here's the thing with closing costs. Like I have so many sellers that say, I'm not paying for their closing cost. Like that's in their mind. They don't want to pay for a buyer's closing costs. And I say, well, at the end of the day, commissions, closing costs, warranties, CL 100, whatever a buyer is asking a seller to pay for, at the end of the day, what does it matter what the money goes for? It matters what your bottom line net out the door.
What are you putting in your pocket?
Yeah.
What do you put in your pocket?
So
That's
it really
what matters.
doesn't matter how it's divvied out.
That's right.
But people get really upset about really upset.
I think it's because they don't understand. And so it's really tough to just sometimes explain it in a way where they're like, I get it.
Yeah.
And that's what it comes down to, is like explaining that incentives, whatever side you're on, buyer or seller, especially seller, incentives are one of the most powerful tools you have.
Yeah.
So use that to help get your property sold.
Well, and a lot of times builders don't want to reduce their sales price because that brings their whole neighborhood value down, but they are more agreeable to closing cost incentives, giving free screen porch or something like that, that's not bringing their values down. So as a buyer, if you're going in and saying, hey, I'm going to get $20,000 off this new construction home, that's not really realistic in our market right now. But if you're saying, hey, I want to ask for $10,000 in closing costs, better interest rate, yada, yada, then that is very reasonable. Don't you think?
Yeah, 100%. 100%.
But as the market gets better, we do see builders not offering as strong incentives as they did like a year ago. So that's dependent too on timing.
100%. And I think that you just have to be aware. Again, I go back, I'm not trying to beat a dead horse, but go back to, you need a good real estate agent, a great real estate agent. And I think you need someone who's committed and someone who knows exactly how to get around all these nuanced topics. So we have here, I kind of took we just recorded a video for 2025, the end. And I took some of that so we could kind of go over snapshots. We could do this and this, or if you think it's best just to do that.
Yeah, because we'll have the video out on Sunday.
All right. So the video comes out on Sunday so you guys can watch it, which is more about what's going on in the real estate market in 2025 at the end.
But also comparing it against, like, how was December of 2025 compared to December of 2024?
Are you going to do that tonight or no?
Well, then we kind of touch on that in the video, and we're going to give graphs, like charts and everything. But overall,
I think it's interesting.
Yeah, overall, like even oceanfront condos, 33.77% over a 5-year period increase.
And that's what is that? The condos?
Oceanfront condos.
Yeah, the oceanfront condos.
And that was hit the worst. So like December this year was a great time to buy because it was 18% down from last December. But overall, so it's so dependent on timing, right? We're in the off season, but overall, it was only almost 8% year over year.
Okay.
So it's still dropped a little bit.
You're saying 8% increase or decrease? Okay. Yeah. So an 8% decrease, but overall from 5 years, it's up 38%.
33. Yeah.
33%. So fine. I mean, you're not going to have perfect years every year, but long-term, as we talked about earlier.
I think that's where timing comes into play, because some people bought at the height of the market and some people bought right before that and they're like, yay, this is great. And some people bought in 2015 and then sold during the height of the market because they'd bought several properties and they really made some good money. So timing, don't you think, is everything in the real estate market here and everywhere?
100%. And I think people get caught up in that. Heck, we have. It's like even when you're ready to buy or you want to buy, sometimes you have to buy when you're at the close to the peak, or you could just wait it out.
Or sometimes when it is the right time and it's the right time, you don't have the resources to take advantage of it. And you're like, man, I know it's the right time.
And I think a lot of times you can, if you can show the numbers to somebody. So for those of you out there that are like, hey, it's the right time, but I don't have the money, get a friend, maybe get a loan from somebody, try and go in with somebody, because you can still benefit if you're able to make it happen. But I agree, timing, that's like I said earlier, it's time in the market, not timing the market. So you're saying it is timing, and I'm saying it is sometimes. You buy when low and you sell when it's high.
Which doesn't always work out.
It's not easy to do, but if you can do it. But
I mean, condos overall in the Grand Strand are up 23% in a 5-year period. They were also down at the end of the year. So condos really in townhomes are the biggest segment of our market that we saw a pretty big decrease this past year in 2025.
Yep.
Whereas for homes, like in the whole Grand Strand, we were actually up almost 1% from December to December.
Okay.
And then in a 5-year period, almost 32% increase. So I feel like condo market probably was going up at a more rapid pace than the residential home market. And so when the market hit, that segment hit a bigger decline, but at the end of the day, it still stayed about the same overall appreciation.
Yeah.
If that makes sense. New construction is still at the same, like 31%. So really across the board, we're in the 30s.
Over a 5-year period.
Over a 5-year period. That's a lot. It's like a third for a lot of the segments of market that it went up, homes went up in value over a 5-year period.
Yeah. I mean, a $300,000 home, that's $90,000.
Yeah.
That's not, yeah.
But again, even though the market has slowed, we're still not seeing it go back down to 2019 prices.
Yeah.
And it's been high interest rates for several years now. And actually, the end of last year was the lowest we've seen. So we're starting to kind of ramp back up here, which will be interesting. But even with that, like really hard market, we still ended up with these numbers.
Mm-hmm. So that begs the question, how good is it going to be when the market's better?
Yeah.
We say something that every drought ends in recovery. So, that's where we're at. We've been in a drought, like 24, 25. What NAR is saying is those are two of the worst years we've seen in a long time. And, we're probably talking about, if we're talking transactions, we're probably talking 4 million. And next year will probably be a little more. So you might creep up past
4 million properties sold in the United States.
Yes. Not in Myrtle Beach. And overall next year, probably, if it's a good year, I think what they're trying to say is take 15% of that and add it on top. So you're probably talking, what is that? 4.6, maybe 4 point something. I don't know. Either way, point is it's going to be more over 4 million. And if you look back, there's charts that show like every single year, how many transactions was it? Mm-hmm. And I think I actually took some notes. Let's see. Yeah, I don't know where I put them, but
these notes are like chicken scratch. I can't help you.
Okay. So, it doesn't matter. I don't have, it's somewhere in here, but it doesn't matter. The point is it's going to be higher than that. And most people don't care about the number of transactions, but yeah, I think 2026 is going to be a good year. I think there's going to be, everybody's kind of predicting 6s. I think will be a little bit lower. I think some people would agree with that. Mm-hmm. And this is the time to start to get out there and buy.
Definitely. I would buy before it gets a little crazy.
Yeah.
We don't know.
We don't know.
It got crazy overnight.
Yeah.
Before.
It happens fast.
It happens so fast. So.
And every market's different.
Mm-hmm.
So you need to understand your market. But if you have questions about Myrtle Beach and you have questions about buying, selling, investing, building, renovating, whatever, we're here to help. Yeah. And that's why we do these live videos. And it was really cool to have you on the live video with me tonight. Yeah, I like that being by myself.
Did we go like really long because we were?
Yeah, but it's not really long, but I just, as long as, I don't care how long it is, as long as we answer the questions. It looks like we have, is Myrtle Beach on the beach, right? During the years, thanks.
Yeah.
Oh yeah. That's the thing. I think, thank Aaron, I'm glad that you are happy with it. But, the bottom line is that you need to get clear on when you want to purchase. So I think it doesn't matter. I just wanted to make sure we got everybody's questions answered. So if you do have questions and you're seeing this live video later, reach out to us. Our information's in the video and we're always here to help, and watch our videos. We would love for you guys to subscribe. What I found is that when I look at our YouTube channel, a lot of people who watch our videos aren't subscribers.
What?
It's really interesting. So if you watch our videos and you like the content, please make sure you subscribe. It really helps us. And we love putting out this content. So let us know that if there's something you want to see that we haven't covered yet. We're going to do a live every single week. The time may change, but right now they're Thursday at 5:30s or Thursdays at 5:30. I put an S on the 5:30s.
It's getting late.
Yeah, I know. But if you have things you want us to talk about, put it in the notes and let me know if you want to see Tiffany on again. Or should it just should it just be me and doing my
I was really sick the last 2 months.
Yeah, you have been sick. I mean, man, there's a
Frank
flu
was
going
holding
around.
down the fort.
Holy
There's hard
camoli.
stuff going around this year.
It's true. It's been quite the last couple months.
Mm-hmm.
Were you going to say something?
I don't remember. My sick brain is still here.
All right. So hopefully this brought you some value. Hopefully that going over these numbers, I love going over these numbers and I love talking about reports from NAR and what's going on in the market.
Oh, I was going to say something. Sorry. Because a couple weeks ago when you were on, I was watching from home being sick. And
did I do something wrong?
No. Well, first of all, you said I was in real estate for like half the time.
Oh my gosh.
But anyway, I have to be here to
make
sure to keep him on track. So, but one of the people asked if we could do something on how to interview a short-term rental management company and what questions to ask. So I do want to say that I am planning a video series about that. So if you're interested in short-term rental management companies, what to ask, what to look for, red flags, all of that, then stay tuned because we will be bringing that shortly.
Okay.
And doing our final renovation video for the last condo, where we will show everybody what the final result was.
Ooh,
so that's coming up this month too.
The big results. Okay.
Yeah.
Cool.
Well, thanks for having me.
Yeah. Thanks for being here. And if anybody has any questions, reach out. Otherwise, hope you guys have a great next week. See you next Thursday at 5:30. Will you be here?
I don't know.
See, this is what I'm talking about. I'm committed.
It depends on how good he is. I don't know.
All right. We'll see everybody next time. Take care, everybody.